Good day everyone, thank you for joining me. My name is Matt and I'm the Communications Analyst, and I'm going to discuss our latest report on MultiChoice, which covers the financial results for the full year of 2021. In this presentation, I'll discuss the results which the market did not like despite resilient growth which beat expectations, good subscriber growth and a reduction of losses in the rest of Africa. We'll look at the impact and the performance of MultiChoice, which has been under pressure year to date, and I'll take you through our DCF valuation and explain why we're keeping our recommendation overweight. The results beat expectations on the top line, with revenue growing 4% overall, 1% in South Africa and 11% in the rest of Africa. Subscribers, which is one of the key drivers, grew in South Africa and rest of Africa and now totals more than 20 million households. Revenues from subscriptions grew 5% despite commercial subscriptions under pressure. Advertising revenue suffered as a result of the absence of live sport events. It lost 11%, but it only makes a small portion of group revenue, so the overall effect of lower advertising revenue was not enough to offset revenue growth. The South African business benefited from both continued growth in the middle and mass market and annual price increases, and the rest of Africa business grew subscription revenue from a higher subscriber base, which resulted in a higher average revenue per user. The market didn't react well to the results. It lost 2.7% on the day and has been under pressure in the days following. Part of that pressure is the decision by MultiChoice's management to keep the dividend flat. Since our last overweight recommendation in June 2020, MultiChoice has outperformed the market. However, it has lost most of the gains it made last year in the first couple of months of the current year. MultiChoice kept the dividend unchanged to preserve the balance sheet and in light of the current environment and the announcement of their further 4 billion rand investment in BetKing. Our DCF valuation assumes a WACC of 7.5%, a terminal EBIT multiple of 5.5, and that gives us a fair value of about 147 Rand, which is about 10% upside from current prices. We are cautious of dividend growth given that MultiChoice didn't increase their dividend this year, but just remember that they did pay one last year when most companies did not, and their forward dividend yield is expected to grow to 7.4% by the financial year of 2024. Despite the recent concerns over the dividend, we like MultiChoice for a number of reasons. It has strong cash flow generation, it's the leading provider of video in Africa and has established significant scale with its DTH and DTT capability, which serves as a moat. It's got a good management team that are keeping costs under control, and it has a subscriber base which is still growing, and that's a key driver that we're keeping our eyes on. We think the market has discounted MultiChoice too much, and based on our valuation we think it's undervalued, so we're keeping our recommendation overweight for now. If you'd like to place a trade, please speak to your financial advisor or contact the dealing desk. Additionally, the report on MultiChoice can be found on MyBase. Thanks for tuning in. Before we end off, please take note of the following disclaimer. Thanks.